it's not the technical definition to say that 2 quarters of contraction is a recession? Since when?
It is.
Since when?
It is the technical definition. That's the definition. And, even Fed Chair Powell, they got to him. They were able to intimidate him. So anybody who thinks the Fed is independent, now you have Chair Powell claiming that 2 negative quarters is not a recession and we're not in a recession. But Megyn, 2 negative quarters is just a minimum for a recession. We're going to get a 3rd negative quarter. We're going to get a 4th negative quarter. We're going to be seeing contracting GDP for years. This recession is just getting started. And the increase in unemployment is coming. People that are pointing to the low unemployment rate and saying this means we're not in recession, that's nonsense. Unemployment is a lagging indicator. The unemployment rate is going to rise as the recession continues. But also, Megyn, they're trying to claim that we're not in a recession because we have a strong labor market. We don't. We have a very weak labor market. Real wages are collapsing. Wages have never really fallen this much in real terms in history. That is a weak labor market. When you have a strong labor market, workers can demand raises. They have power. They can go to their bosses and say, I want more money, or I'm going to quit and take another job. That's not happening. Workers are being forced to work for pay cuts. In fact, a lot of workers are taking second jobs and third jobs because they can't make ends meet on their main job. That is a weak labor market.
So you're saying when inflation's at 9.1% and you're only getting a 5% raise, what you've really had is a 4% pay cut, and that's not a strong labor market.
Correct. I mean, let's say we had inflation and a strong labor market, which is what they're pretending. If inflation was 9%, workers would be getting 12% pay raises. They would be ahead of inflation. The fact that they're accepting raises that are much smaller than inflation shows that this is a weak labor market. Workers have no power. They are forced to accept lower wages because the labor market is so weak.
Before we get into that, because I do want to ask you a little bit more about the wages, on the administration contradictions, I just want to point this out. All right, first there is Biden's National Economic Council Director, Brian Deese. In March of 2008, I think he was working for the Biden administration, he said, economists have a technical definition of recession, 2 consecutive quarters of negative growth. Now, he's with Biden, 2 negative quarters of GDP growth is not the technical definition of recession. So which is it? I mean, it's a 100%, 180 reversal by him. Biden's chair of the White House Council of Economic Advisors, Cecilia Rose, in May of 2022, 2 quarters of negative growth is an indicator of recession. Now, as of July 21st in a White House blog post, what is a recession? Some say it's 2 consecutive quarters of falling real GDP. And she goes on to say, that's neither the official definition nor the way economists evaluate the state of the business cycle. She just said in May, 2 quarters of negative growth is an indicator of recession. Then you got Jared Bernstein. He's the economic advisor. Wait, I got two more. September of 19, he says a recession is defined as 2 consecutive quarters of declining growth. Now, that idea is, quote, wrong. And then you got Heather Bosey, his economic advisor. May 2019, a recession refers to 2 quarters of negative growth in GDP. Now, that does not necessarily indicate we're in a recession. Okay. Peter, I can't.
Well, look, I'm 59 years old, all right? And I have never in my life heard a recession defined any other way other than 2 negative quarters of GDP. That's the definition, because recession refers to whether or not the GDP is expanding or contracting. It doesn't refer to the level of unemployment or the level of inflation. It specifically is there to reference what is happening with GDP. Right? That's how they define economic growth. I mean, I have a lot of problems with GDP, but that's how recession has been defined. Recovery is when the GDP is expanding. Recession is when it's contracting. That's it. And if you've got 2 negative quarters in a row, you're in a recession. Now, maybe it's a shallow recession. Maybe it's going to be over quickly. Now, I don't think so. I think we're just early in this recession. I think the 3rd quarter is going to be even weaker than the first two. In fact, I think they're going to revise the second quarter number even lower. And I was not surprised by that negative number. I expected it. And in fact, last year, I expected the first quarter to be negative. I was forecasting that the U.S. economy would be in recession in the first half of 2022 back in 2021. And by the way, back in 2021, I was also forecasting that inflation was not transitory and that it would get worse. I said inflation would strengthen and the economy would weaken. We would have stagflation, and that is exactly what we have.
You also said that Elon Musk would not buy Twitter and that if he did do it, it would be an economic mistake for him. And we had you on for both of those. And it turns out you were right about those predictions. So just as an aside. All right, let me.
Well, that was an easy one.
Well, I mean, you kind of stood alone on it. So to your credit, you were right. Let me ask you about this. I don't totally understand it, but I would like to. In the Dispatch, which is a news service, right-leaning, Jonah Goldberg and others, they're talking about the employment numbers and worker compensation, okay? And how it rose, worker pay rose 5.1% in the second quarter, which was not enough to match inflation, as you and I just discussed. But they say, but that's strong growth beat economists' predictions. Then they conclude as follows. That is likely to make the Fed uneasy because it hints at the possibility of a wage price spiral, meaning when companies pass on the expense of higher wages to consumers by raising prices, motivating these consumers to seek still more pay raises and kicking off a vicious inflationary cycle. Can you opine on this wage price spiral, and are indeed employers passing on these higher wages to consumers in the form of prices?
The wage price spiral is another fiction created by government in the 1970s to try to blame the private sector for the inflation they created. Inflation is not created by workers demanding raises. It's not created by companies raising prices. It's created by the government expanding the money supply. That's the literal definition of inflation. It's an expansion of the money supply. It's the money supply that is being inflated. And when you inflate the money supply, prices go up. Wages are just another price. They are the price of labor. But just because nominal wages go up 5%, if inflation is 9%, that doesn't mean workers are ahead. And in fact, the wage number is likely accurate. The price number is not. The real increase in consumer prices is probably 18%, not 9%. That means real wages are collapsing. And that's one of the reasons that in the most recent economic data that we got last week, the savings rate is now at the lowest level since mid-2009. It collapsed down to 5.1. What was happening to the economy in mid-2009? We were in the Great Recession. So the last time we had a savings rate this low, we were in a huge recession. Why is the savings rate so low? Because the recession is forcing workers to dip into their savings to pay their bills because their pay increases aren't enough.